Robert Kiyosaki's urgent message: brace for the inevitable market crash and discover the $30 asset that can safeguard your financial future. Robert Kiyosaki, renowned author of the best-selling book Rich Dad, Poor Dad, and a prominent speaker on personal finance and entrepreneurship, has recently issued a warning about an impending market crash. With the rise in layoffs at major companies like Google, Microsoft, Amazon, and Facebook, Kiyosaki emphasizes the importance of paying attention to his message. By the end of this video, you will gain a comprehensive understanding of Kiyosaki's warning and learn the critical measures he recommends to secure your financial future. Robert Kiyosaki's recession warning. Robert Kiyosaki has been consistently issuing precautionary alerts about an imminent market crash for years. He firmly believes that the current economic situation is unstable and a crash is inevitable. However, in 2023, he intensified his predictions on the negative future of the global economy. Today, we are witnessing a crash, whether we like it or not. The crucial question is, how will you survive this impending catastrophe? Kiyosaki sees this crash as the greatest opportunity in world history. It is going to be colossal, and even if they manage to solve the coronavirus crisis, the crash will still occur. Kiyosaki began increasing the frequency of his warnings in 2023. On February 10, he tweeted that the crash had arrived as the first dominoes fell in Silicon Valley in 2022, resulting in 144,000 job losses with an additional 66,000 in 2023. He mentioned that Stansberry Research foresaw a Valentine's Day massacre, alerting investors that everything would plummet, including values of gold, silver, and Bitcoin. Although the global recession is regrettable, Kiyosaki advises patience. Despite the crashing world economy, he also shares some positive news. There will be a rise in bankruptcy, unemployment, and homelessness, but there are plenty of bargains to be found in gold, silver, and Bitcoin. Kiyosaki points out the increasing prices of these assets as evidence of the deteriorating financial situation in the United States. He claims that their prices are rising because the poor and middle-class Americans are struggling to make ends meet and falling deeper into debt. However, Kiyosaki urges his 2.4 million Twitter followers not to panic, emphasizing that this is actually excellent news. With just $30, one can embark on the journey of becoming richer by purchasing at least a single silver coin. He continues to implore his followers to avoid becoming poorer. Furthermore, he reveals his plans to acquire more gold, silver, and Bitcoin, which he considers real money, unlike the paper currency that will depreciate after the upcoming plunge. According to Kiyosaki, the Federal Reserve will be compelled to print billions of currencies to support the markets, thereby increasing the country's debt and devaluing the dollar. Factors contributing to a global recession. According to Robert, these 6 factors pose a high economic threat and likely lead to a global recession. Number 1. Debt. Debt, being the first factor contributing to a global recession, is a significant concern. The escalating levels of personal, corporate, and government debt can strain economies and hinder growth. Excessive debt burdens individuals and businesses, limiting their ability to invest, spend, and contribute to economic expansion. When debt becomes unsustainable, it can trigger a domino effect, leading to financial crisis and recessions. It is crucial to address and manage debt levels effectively to ensure long-term economic stability and mitigate the risks of a recession. Number 2. Inflation. High inflation rates erode the purchasing power of individuals and businesses, leading to decreased consumer spending and investment. When inflation spirals out of control, it disrupts economic activities, undermines confidence, and reduces the value of currency. Central banks often implement measures to control inflation, such as adjusting interest rates and monetary policies. Monitoring and managing inflation is crucial to maintaining price stability and fostering sustainable economic growth while mitigating the risks of a recession. Number 3. Economic inequalities. Widening gaps between the rich and the poor can lead to social unrest, strained public resources, and reduced economic mobility. When a significant portion of the population struggles with financial hardship, consumer spending and overall economic activity decline. addressing economic inequalities through policies that promote inclusive growth, equitable distribution of resources, and access to opportunities is crucial for long-term economic stability and minimizing the risks of a recession. Creating a more balanced and inclusive economy benefits society as a whole. Number 4. External shocks. Events like natural disasters, geopolitical conflicts, or unexpected global events can disrupt supply chains, trade flows, and investor confidence. These shocks can lead to a decline in economic activity, reduced investment, and increased uncertainty. Governments and businesses must be prepared to mitigate the effects of external shocks by diversifying their economies, implementing risk management strategies, and fostering resilience. Adequate contingency planning and adaptability are essential to navigate through unexpected events and minimize the risk of a recession. Number 5. Policy failures. Poorly executed economic policies, inadequate regulatory measures, or misguided fiscal decisions can undermine economic growth and stability. Inefficient or corrupt governance systems can lead to market distortions, reduced investor confidence, and a lack of business-friendly environments. It is crucial for governments to implement sound and transparent policies that promote sustainable economic development, encourage entrepreneurship, and ensure fair competition. Strong and effective policy frameworks are essential in mitigating the risks of a recession and fostering long-term economic prosperity. Number 6. Lack of adequate financial literacy. Insufficient knowledge about personal finance, investment strategies, and economic principles can lead to poor financial decision-making. Individuals who are not equipped with the necessary skills to manage their finances may fall into debt, make risky investments, or fail to plan for economic uncertainties. Promoting financial literacy through education and accessible resources is essential to empower individuals to make informed choices, protect their assets, and contribute to overall economic stability, reducing the risks of a recession. Effective suggestions from Robert Kiyosaki. Now, let's take a look at 4 effective suggestions from Robert Kiyosaki that can help you prepare for such an occurrence. Number 1. Build an emergency fund. Building up an emergency fund is crucial for financial stability. It provides a safety net during unexpected expenses or economic downturns, ensuring individuals can navigate challenges without falling into financial hardship. Number 2. Diversify your investments. Diversifying your investments is vital for mitigating risk. By spreading your investments across different asset classes, such as stocks, bonds, real estate, and precious metals, you can minimize the impact of a downturn in any single investment and enhance potential returns. Number 3. Focus on financial literacy. Focusing on financial literacy is key to making informed financial decisions by improving your understanding of personal finance, investment strategies, and economic concepts. You can navigate through economic uncertainties with confidence and build a strong foundation for financial success. Number 4. Be prepared. Anticipate economic downturns, have contingency plans in place, and stay adaptable to changing circumstances. By being proactive and ready to take action, you can minimize the impact of economic challenges and position yourself for long-term success. Robert Kiyosaki's warning about the impending market crash demands our attention and calls for immediate action. By heeding his advice and implementing measures such as building emergency funds, diversifying investments, focusing on financial literacy, and being prepared, we can fortify our financial resilience in the face of economic uncertainties. Now is the time to educate ourselves and adapt to changing circumstances and position ourselves for success. Remember, knowledge is power in times of crisis. Subscribe to Know Money for more valuable insights from experts like Kiyosaki and stay updated on the latest strategies to thrive amidst economic challenges. Thanks for watching.